Good afternoon, everyone. I'm Andrew Pace, Chief Client Experience Officer at Asset Compliance Solutions. And on behalf of ACS, I am delighted to welcome you to our panel discussion on the current state and future outlook of the asset-based lending and lease finance industries. Over the past 4 years, our industry has faced unprecedented challenges from the Great Recession to the post-pandemic recovery, skyrocketing inflation, and high interest rates. Today, we have 3 distinguished experts who will share their insights and experiences. Let me introduce you to our panelists. First, we have Brian Roberts from TAB Bank. Brian manages a robust $300 million loan portfolio of semi-trucks and trailers. With a background as a former owner of a third-party logistics company, Brian brings a wealth of experience in business finance, portfolio management, and freight logistics. Brian, welcome to the panel. Next, we have Mike Peplinski. Mike's the vice president of one of the largest insurance agencies specializing in repossession insurance. Mike transitioned from banking to insurance and now insures over 500 collateral recovery companies nationwide. He's also the founder of an exclusive repossession insurance program. Mike, thank you for joining us today. Last but not least, we have Regene Kenyon. Regene is the vice president of servicing at Navitas Credit. With over 25 years of experience in the commercial equipment finance industry, Regene has climbed the ranks from senior collector to her current executive role. Her diverse background includes positions as a recovery agent, collections manager, and senior business analyst. Regene, we're so glad to have you here. Thank you for joining us. To start us off, what lessons would you say have you learned from the past 4 years? Brian, let's start with you. What strategies have proven effective in mitigating risks and seizing opportunities during these turbulent times?
Thanks, Andrew. Boy, lots to learn, right? What an interesting cycle the economy and the transportation industry has gone through. Quite unique, I think, compared to maybe historic cycles. Lessons learned, I think would be, honestly, the biggest lesson I've learned in this downturn is that the American dream is alive, I would say. It's been amazing to watch the resilience of these owner-operators, these entrepreneurs who are trying to make it in the transportation space, just struggle and battle and fight to stay in their trucks, to stay on the road in spite of, rising fuel costs or rising interest rates or dropping spot rates or an increased cost in vehicle purchases. So I think that's the biggest lesson and takeaway for me in my seat is you got to hand it to these truckers, man. They're out there trying to do it. Unfortunately, maybe the resilience of these guys, I think, is prolonging the recovery because of the surplus that happened kind of during COVID. And so that's what we're trying to do at TAB, is to help keep these guys in their trucks and help their success be our success.
Great, thank you. Mike, what strategies have proven effective in mitigating risks and seizing opportunities during these turbulent times?
Yeah, well, the last 4 years have been very interesting. What you realize very quickly over the last few years, where everything goes back to the contract, and I'm a firm believer of that. You always can't minimize or take away the risk that's out there. The exposure is going to be coming, and it really goes back to the contract of who it really kind of falls on. So a lot of people don't pay attention or haven't paid attention to their contracts that they sign with their lenders, and lenders to their agents out there in the field. But when it comes to mitigating risk, it really goes back to the contract, which we'll get into later in the conversation. And if the wording in the contract is written well, the responsible party will be, held responsible, and that is key. Right now, there's many contracts out there that the wrong party is getting held responsible, and it's really hurting people.
Great, thank you. That's great. That's great information. Regene, how have these experiences reshaped your approach to asset-based lending and lease financing?
It reminds me that different economic times call for different approaches. We had several years of, before the pandemic, of wonderful low delinquency and charge off. We felt like we were doing everything right to continue that trend. And just when you think you're doing everything you can and there's nothing new to learn, then you get hit with a new economic cycle. We had to change our approach, for example, on being willing to negotiate repayment terms and settlements that we may not have been willing to accept in the past, and to possibly collect a little bit more and have less of a loss than take the full loss by refusing, any type of terms or renegotiations. So that has been a big takeaway, is making sure that you don't maintain the same approach when economic cycles are different. You really have to change your approach. And in this case, our approach has been changed for a good 4 years now, pretty long term now.
Thank you. I love that line. Different times call for different approaches. That's great advice. Thank you. Next question for the panel. Regine, we'll start with you. What changes has your organization implemented to streamline processes and enhance productivity in a talent and labor constrained environment?
Oh, that's definitely been a challenge. One thing we did from a corporate level is we hired a corporate recruiter because talent was definitely a challenge. And so that helped streamline it for all the managers in the different departments that had available positions. One thing we did from a customer facing perspective is we added enhancements to our customer portal and allowed them to better navigation, allowed them more self-service options. So that gives our team an efficiency. And then we also required that some tasks could only be done by the customer through the portal, and under the concept of security, right? Such as changing ACH information, but that also gave us the benefit of accuracy. We didn't have the human error on our end of input issues, and also an efficiency where the customer was driven to make those changes rather than our staff make those changes. So we took multiple approaches, and those are just a few examples.
Great, thank you. And just I guess a couple of housekeeping notes before we continue. If any of our audience has any questions, you can enter them into the Q&A section at the bottom of your screen. We have devoted some time at the end of today's webinar for questions and answers, and maybe answering your questions as they're received. Brian, let's go to you next. What changes has TAB Bank implemented to streamline processes and enhance productivity in a talent and labor constrained environment?
Yeah, I think we've been quite lucky with our staff here at TAB. I think our team is great. I mean, first and foremost, but the influx of equipment that's gone delinquent or in workout has necessitated us to rely on partners like ACS to outsource processes or to outsource collection efforts. So we've tried to lean on our partners and our technology to maximize our efforts while keeping the staff smaller, maybe. So we have a built-in APIs to a number of different things, from valuations to underwriting models to GPS stuff, insurance stuff. And so I think for us, it's been this is kind of an all hands on deck. The culture at the bank shifted definitely during COVID, where it was a culture of everybody's in the office every day. You don't work from home, to now you all have to work from home and you can't come into the office, to, well, now we got to bring everybody back because we need everybody here. We need everybody working hard. There's no quiet quitters on the team, and it's all hands on deck to right the ship. Kind of, not that it needed to be righted, but to make sure everybody was still important and had a function and had lots of important tasks on their plate. So I guess I would answer that question with leveraging partnerships, trying to use technology to efficiently make our tasks quicker to be done.
Great, thank you. I appreciate that. Mike, what kind of changes are you seeing at Harding Brooks?
Well, kind of a little bit different of approach. I was thinking about the question, and more or less, I think what we did differently, or what we've invested in more so since COVID, was really the education piece in the industry. Because from the risk perspective, I firmly believe knowledge is power. If you truly understand your risk, you truly understand the circumstances that you're facing, you will do a little bit different from a training perspective, a safety culture perspective, a compliance perspective. It all kind of goes hand in hand. So we kind of really went all out and do a lot of training with national associations, with our clients, webinars such as this, to educate people on really what's kind of coming down. And really what's coming down is, these claims from all aspects are increasing at a crazy rate. Since 2015, repossession lawsuits have increased by over 300%. Every year for the last 4 years, lawsuits have gone up by 30%, over 30%, over 30%. And part of that is, again, that's the nature of our society right now. You have attorney advertising, you have educated public that, hey, when something's going wrong, we got to turn and point the finger and sue, because that's what we should do. Litigation funding, that's really just paying these attorneys to go after consumers and after yourselves as lenders and as financial representatives. So from our perspective, it's all right, it's going to be increasing, things are going to be coming at you. You have to get your ducks in a row. You have to make sure your training's up to date. You have to make your compliances up to date. You need to update people on their training. And then kind of going back to what we said, what I said early on was, it all goes back to the contract, and that's twofold. It's not just for the field agents that are not covered. It's for the lenders, every financial step in between. It follows suit. So we got to make sure that those contracts are written well. We have partnered with a attorney law firm that has helped us a lot and helped our industry, our clients, the lenders across the board, to making sure the verbiage is proper. Because when something goes wrong, again, it goes back to the contract. And if your contracts are poorly written or not, well looked at, someone's going to get stuck doing something they don't want to. And what we found early on, before COVID, was people from both sides just signing away on contracts just to kind of get the flow of business going and not worrying about the aftermath. So what have we done different? We've put a lot of effort and energy into educating all sides of this equation, from the Repossession Lending Institute, to make sure everything's as good as it can be.
Great, thank you, Mike. I appreciate that. Our next question, Mike, let's go back to you. How have you leveraged technology and automation to optimize your operations and to improve your customers' experience?
Well, everything's about simplicity nowadays and efficiency, right? We as an agency, we have an online portal that has everything that they can use, from looking at their policies, looking at their history, from their employee records to you name it. It's a click of a button. It's all online. It just makes things very efficient, very quick. They obviously can come to us, but most people want to do it instantly. And whether it's in the evening, at night, to send out a certificate to prove insurance, to prove their coverage is in check, to continue to move their business. Everything is automated now. Some people take advantage of it. Some people will still want to talk with you on the phone, which is totally fine. But technology across the board is, It just makes things simple, makes things more efficient, and everything that we do, that you guys do, it has to be quick, it has to be accurate. And that's really where kind of where we put some energy into.
Great. No, thank you. Brian, how about you? How has Tab leveraged technology and automation to optimize your operations and improve your customers' experiences?
Great question. I think about maybe the systems that we used, 4 or 5 years ago versus the systems that we use today, and it feels like everything's changed. It feels like we're constantly trying to change. The phrase over here is function and dysfunction, or build and flight. It feels like we're trying to update or improve or reinvent as often and as quick as we can. I think we're looking forward to AI and what that means for us. As a bank that's not very big in the industry, we have a couple homegrown products that it seems that we put something out and develop it, and then before you know it, people are saying that's really outdated and it really should be updated. And hopefully the cost to update those with AI minimizes that cost and keeps us up to date in our programming and in our homegrown systems that we need. I think one piece of technology that we've come to really rely on is the improvements in GPS technology and the telematics that are in trucks these days and trailers. We're constantly trying to find stuff that we've lost or that we've lent on that we need to get back. And I guess that's a really big piece of technology that we've come to really dive into and see how we can utilize to minimize loss at the bank.
Great. Thank you. And Regine, how has Navitas leveraged technology and automation?
I think like Brian mentioned, you constantly have to evolve, and one way we do that is through annual enhancements in our computer system, and at least annual. Some of those enhancements come a lot sooner than annually, but we do make sure that that's a priority, even though it does take time to test the new enhancements. We know that we will see greater efficiencies once we have those tested and implemented. And I mentioned enhancements that we made to our customer portal. We have an internal application development team so that we can control some of the applications that we create and deploy and maintenance ourselves rather than depending on a third-party vendor. So our application development team can create things that are outside of our primary our front to back end computer system, but it can interface with that computer system and capture data from that computer system. But we're not reliant on that third-party vendor who maintains our front to back end to do everything. So we give ourselves a little more capacity there, and then we get to internally prioritize without being concerned with the needs or the possible staffing issues of the third-party vendor. So that's been a big help, is to have some homegrown systems, as I think Brian called it. And Andrew, while I have you, if you don't mind, I would like to touch base on something that Brian said earlier and circle back. I think when we were talking about the challenges of staffing and the constraints that we've seen in the market and how we have been able to work around some of those issues. And he mentioned, partnering with outside sources such as ACS. And I know that that's something that's been a benefit for us here at Navitas. We used ACS for a long time as our repossession agent nationwide. And for a long time, that's what I thought your wheelhouse was, and that's all you did. But in having further conversations and having touch points every quarter on how repossessions were going, and trying to cut down the timeline of repossessions and all, we got into discussions of your other services, and you opened my eyes to the fact that y'all actually do what you call pre-repo collections. And so that allowed us to start assigning accounts to your team prior to deciding whether to repossess. And that did also increase our capacity. The team can have a lot on them here because we are a smaller team, or we were just experiencing staffing issues. So it was nice to have a partner that we could shift some of that load to. And actually, we monitored the results over, I would say, the initial 6-month period, and it was very positive results as well, as far as collecting funds versus collecting the collateral. And that's always the preference.
I appreciate that, and we're glad
Andrew,
that
I was gonna,
we can be here for you when needed, Regine. Thank you.
Yes, thank you.
Andrew, I wanted to chime in a little bit more on kind of add to what Brian said on some telematics and stuff. From the insurance world, we have our own exclusive insurance program nationwide at Harding Brooks. And if you look at the insurance world, especially in repossession and in auto liability, it's shrinking because they just can't get their arms around it. About 7-8 years ago, there was 7 to 10 programs out there nationwide. Now there's 1 to 3 depending on your state. And the biggest piece that we found that has helped our program, has helped other insurance programs stay afloat, stay alive, continue doing well, is this telematics, cameras, all the technology that's out there. Because right now in the insurance world, if you don't have solid proof, you lose. The he said, she said, you lose. It doesn't sound fair, and it's not fair, but that's the reality right now. So the telematics really drives driver behavior, which helps them underwrite and helps them, dictate future behaviors by drivers. The cameras, there's AI cameras out there that literally will talk to you. You talk to your driver as he's driving, just like a coach in the seat next to you as you go. All this kind of stuff is huge as for now and really in the future to kind of keep afloat, keep more programs out there, keep more competitive programs out there. The more programs, the better for everybody, right? But all the technology right now from an insurance standpoint is critical to keep insurance carriers around. Otherwise, it's just almost impossible. It's a lose-lose right now. And I have these conversations every day where I'm telling one client and telling the carrier, I'm like, it's literally a lose-lose. Clients are losing because premiums are going up. Carriers are losing because they can't offset the premium with the that they're collecting with the losses that they're paying out. So the biggest thing is, body cams are coming very big now. The telematics for driver behavior, the cameras in the video to see who's at fault, who's not. That's playing a role and going to be the role to keep people's exposures at bay.
Yeah, no, that's great. Anything that can be done to mitigate risk is important these days. Thank you all for that. I appreciate it. Our next question, really for all three of you, we talked about, leveraging the technology and automation. What challenges have you encountered when implementing some of those changes? We'll start with you, Regine.
Unfortunately, some of the some of the obstacles that I always encounter from being on the servicing end of things is that sales seems to get the priority for their needs to be met. So unfortunately, my obstacles can be internal in that respect. And I do have to fight for my position on the priority list when we are looking at enhancements such as that. There are external obstacles that we can encounter as well. Cost, it can be, ease of use for your customers, if you're looking at enhancing a customer facing technology. And you know, unless it's your first time working through something like that, I mean, generally you've got tactics to work through each of those obstacles. But yeah, I lovingly say that most of my obstacles are the sales team.
Gotcha. We hear that a lot, unfortunately.
Regine, I can sympathize with that. That it does
Good.
seem that the operational side, you have to get it in the door, I guess, before you can worry about what you have in the door, maybe. But I
Right.
sympathize with that. That we fight that battle too, and I think. But you know, the improvement with AI or with APIs really help facilitate. Okay, I need this system to work. Okay, well, that's not as big of a deal today as it was yesterday. But I also think technology. If I could jump in, Andrew, I think one struggle with technology is how easy it is to sell something online. It keeps getting easier. There's a lot of great places to sell things online, um, which is great as a lender because you're interested in getting stuff liquidated as quickly as possible, so you minimize your loss. However, maybe easiest isn't always the best. And I think that's one of the things that we've learned at the bank in this downturn is we've got a flood of stuff coming in that we've got to liquidate, and we don't have the staff or the time to navigate each piece individually. So let's push it to someone who can help us with that. And these auction houses are great, but maybe we've experienced a little bit more loss than taking the time to massage a deal or to have a conversation or to reach back out and make some connections with dealers who are interested in having some collateral. So maybe there's a little bit of a challenge there that we've experienced with speed versus value.
Yeah.
Yeah. No, great point.
My biggest challenge right now is this technology is really amazing what it can do, but we find people are checking the box. They invest in telematics or cameras or body cameras to mitigate risk, but just by having it, it doesn't mean all of a sudden you're going to do things the right way. And our insureds, everyone out there, is not using it as a coaching tool, is not actually using that to, telematics is an amazing tool to dictate driver behavior and really coach. It's not to kind of slap a hand and give them corrective actions. It's, are you monitoring that, and are you seeing that, and are you correcting that? Just because you have it, I kind of use the example, just because you send somebody to a defensive driving class doesn't mean they're going to come out and be a great driver, right? Everyone knows how to drive. It's, are they going to drive fast? Are they going to drive careless? It's really more of a choice and more of an awareness thing. The technology is so great, but now these attorneys that are coming at lenders, coming at field agents, they're actually taking this that's supposed to be an advantage to the collateral recovery agent, and they're using it against it. For example, we've had a couple of cases where, telematics was there, clearly cameras are in place, clearly not at fault in the accident, and they're turning around saying, hey, we know you're not at fault. However, your guy was going 10 miles over the speed limit per your telematics. You have a no speeding process or rule in place. And they're like, yeah, for sure. They said, okay, well, looking at this guy's last months of driving records, he's had 7 different occasions that he was speeding. What did you do about it? And they're kind of stuck in like deer in the headlights. They did nothing, and therefore they got their hand slapped. Said, you know what? If you corrected that, even though you weren't at fault, the severity wouldn't have been as bad. So we're going to hit you with 40% of this claim. So the biggest challenge we have is people are not using the technology that they actually invest in to help them get better, to help them minimize this risk. It's no longer just check the box and you're good. It's 1, get it, and then 2, you have to use it and teach and coach and teach and coach nonstop.
Thank you. And while we're on AI for a moment, let's explore that. Who on the panel is knows if their organization is currently using any form of AI?
What was the question? Who has?
I just wondering if any of you are your organizations are currently using AI and how you're using it.
I think the bank, speaking for Tab Bank, I think the bank's taking a very conservative approach to making sure that we protecting customer data, using it in areas that doesn't expose necessarily information of customers to, unknown places. I know that we've just put out our policy for AI for us internally. So I think it's something coming. But for us, we just see the potential benefits so far, I think, and we're looking forward to that. I think the biggest impact will be as we use it. I don't know, maybe this is the most immediate impact, maybe not the biggest, but the most immediate impact will be to help us revitalize or to push forward programs that were written that we still use that need to be updated in their code. So not so much transportation AI yet, but I'm sure that's coming.
Great.
And
Thank
you know, Harding Brooks is not necessarily that we have it, but a lot of our clients are slowly implementing the AI intelligent, you know, cameras that are, as I mentioned earlier, literally a coach on the seat next to you, where they're will tell you, hey, if you're on your phone, put your phone down. If you know, your eyes are drifting this way or that, get your eyes on the road. Like, it literally is a side-by-side coach as you go. They are expensive. They're slowly getting in to the network, to the field, which will clearly bring down claims, bring down accidents, bring down lawsuits. So it's a slow process, but in a few years, I think everybody will be it's second nature and everyone will have them, but it will be a slow process to get it going.
Great, thank you. So on to our next question. So in business, what current trends, opportunities, and risks have you feeling optimistic, and what are you on the watch for danger? So Regine, I'll start with you first. What are the most promising trends and opportunities in the asset-based lending and lease finance industry today?
Well, I think I've already touched on the AI, and I think that's going to be huge down the road. So I won't rehash that. I would mention a current opportunity that we're seeing in the industry is unfortunate for some businesses that aren't making it, some competitors of ours that aren't making it. However, that does, open up our opportunities for us from a production standpoint. We often, vendors use multiple funding sources. And so when one of our competitors shutters, then often we are able to step in and fill the gap that they have left for vendors that used both of us, or more than one primary funding source. So the fact that we've already been with that vendor, we've already gotten established with that vendor, and handled X% of their business on average, but now that one of our competitors shutters, we may be able to double that percentage or have some significant increase. From a back end perspective, I think that I think we are going to see a lot more to come. My company's in a similar situation as to what Brian mentioned with AI in regards to having policies, and we've started some training around it. But we do want to be very careful and conscientious of unintended consequences. And I think one particular risk of the AI, I am going to bring back AI again.
That's okay.
Is with any new technology, I think you've got to see how litigation plays out down the road. If AI creates something for you, who owns it? As a fundamental question. So down the road, I think Mike was mentioning all the attorneys that like to hop on the bandwagon, so to speak. I think there's a lot of attorneys out there that are probably ahead of the curve, more ahead of the curve than I am with AI. And they are, looking for those opportunities to enact litigation. Then when there's new cases, precedents will eventually be set. And until that time comes, there's potential risk, potential exposure.
Great, thank you. You make a great point about lenders, exiting the market. Mike, what does that mean for the future of your business? Like, what kind of risks are lenders facing when they take on another institution's, portfolio?
So right now, and it's kind of the trend has been wrongful repossession claims across the board have been increasing, as I mentioned, year over year, over 300% more than we had back in 2015. To the question of, taking over portfolios, in the last 2 years running, we track every single one and we represent majority of the repossession industry, almost half. So it's actually 49% of the repossession lawsuits that come across our desk were invalid assignments. What an invalid assignment was a lien loss, shouldn't have been put out for military leave or whatever the case. And a lot of that goes back to when people acquire different portfolios, the due diligence is not there. They're putting out repossession lawsuits or repossession orders for stuff they don't even have a lien on anymore. And that's a very big challenge. And again, almost half of the lawsuits we get are invalid assignments. And a lot of it's coming from exactly that question. So the tricky part is doing your due diligence on these big portfolios that you're taking on versus just kind of mass throwing things around. And it's a very tough thing for all parties. And that's kind of why I go back to that whole, it all goes back to the contract, because right now more people than not don't have an equal contract. Now, the bright side is since COVID, more lenders, more finance companies, more repossession companies are actually coming together and trying to work together and very much coming to the table and say, all right, what's working for you? What's working for me? What's not working for each other? And the communication line has been way better than pre-COVID. So long way to go in that communication piece and get things on the equal playing field for both parties and make sure all parties are properly protected from the insurance risk side. But they're getting to the table, they're talking, they're working through things better than they ever have before. So that's a positive trend. Just paying attention to all the really all the details of contracts is where people are getting better at. Part of it, we're pushing a lot of education towards that, because when push comes to shove, when lawsuits happen, they don't care about what your intention was, they just care about what the contract says. And that protects all parties. So from a positive perspective, people are working together, people are wanting to do what's right, people are coming in together versus my way or the highway like it used to be for many scenarios. The scary part is with all the acquisitions, with all the mergers, many orders are being put out and they shouldn't. So that is a challenge.
Great, thank you. So we do have a question from somebody in the audience. So while we're on the subject, I thought it might be a good opportunity to take advantage of this great question here. So somebody from the audience is asking, and Brian, I'll pose this question to you. From a risk perspective, does solving challenged accounts further upstream through a collection efforts or perhaps even a pre-asset sale to avoid a repossession a consideration or strategy for any of the lenders?
Oh, I would say absolutely. One of the things that was of a high strategic nature for the bank this year was, how can we keep truckers in trucks? How can we minimize liquidation issues? And so implementing a across the board deferral program or an enhanced deferral program that anybody could take advantage of, almost like what we saw during COVID. Somebody just had to say the word COVID and they would get a payment deferral. But fourth quarter of last year through first quarter of this year, we implemented a program where it was, hey, if you're struggling, we can help. We want to help. We want to keep you trucking. We don't want to repo your asset. And since that was implemented, we've seen it at least in our portfolio, a decline in delinquencies since January, and so we stopped offering it at the end of the first quarter of this year. But absolutely, anything we can do to even our collectors to take the approach of, hey, everybody knows the economy. Everybody knows the struggles. What is your plan? How are you going to make it? And if you don't think that you're going to make it, then let's figure out how we're going to go to the next step. Let's figure this out together. Let's be a financial partner with you. Let's not just be a big bad bank, I guess. That's maybe how I would answer that.
Great, thank you. I'm gonna
Andrew,
go ahead, Regine. Were you gonna say something?
I would add to that, that actually goes back to what I was saying earlier about different economic times call for different approaches. We also have implemented, we call them FDMs, financial distress modification, where if the customer has a plan, and they are not intending to shut down, I mean, you can't really you've got to have a plan to recover in the near term. Then we're going to look to rework your payments. If the customer is going to shut down, then we're going to try to talk to them about selling the equipment themselves, which I would always recommend. If you can get a customer that can sell equipment themselves, number one, they've likely got more contacts in the industry that would use that type of equipment than we do. They also then they do not have the defense that if you pursue them legally, they cannot claim that you sold it in did not sell it in a commercially reasonable manner. So that can save you on the legal end. You also save the cost of recovering, transporting, possibly repairing the asset and getting it ready for auction, and then paying the remarketing fees. And we try to, if that doesn't work for a customer, then we also try to negotiate a voluntary repossession, and we position it as a benefit to them. Let us reduce our debt by, turning in the asset, and we can get it sold. And then we can talk about what to do with a lower debt versus where you stand now with a higher debt.
Regine,
Right.
I use those same terms. We must operate in the same circles. The commercial reasonable manner. What did you call your distress loan modification? What was it?
FDMs, financial distress modifications. We're owned by a bank, so it's a bank regulation.
Yes, I'm familiar. So is this,
We have to
replace
we have to code them and report on them.
Yes, that replaces the TDRs from last year, right?
It replaced,
The troubled debt restructures.
yes, trouble debt. Yes, thank you. Yes.
Okay, so we call them RLMs, reportable loan modifications on our end, but we're trying to copyright. I think FDMs are anyway. It's funny. That's a funny similarity. It's great.
Well, so Mike, what would you say are some key risks and uncertainties that are on your radar, and how are you preparing to mitigate them?
Well, in our world, there's kind of two sides of it. The auto liability portion, that's part of that's the number one risk out there. And then obviously the wrongful repossession piece of the pie. The auto liability will always be the most challenging thing. You're trying to predict what's going on. And right now, as we touched on, the litigation funding, for those that don't understand what litigation funding is, it's these huge finance companies that are literally funding all these attorneys to go after and just solicit and find work. And they're going to pay them 100% no matter what, whether they win, lose, draw, they get it. And then if they win, they both split a little piece of the pie. So attorneys are out there soliciting business. And in this collateral recovery, this repossession world, they literally are targeting, many of them are targeting the space, and it's just coming more and more frequent. So that is a risk that's very challenging. The positive side, I look at it as a positive negative. There's less mom and pop shops out there because during COVID and whatnot, they just couldn't maintain. So the larger ones are getting larger, and it's a good and bad thing. The good part about it is the larger ones are sinking a lot of money into compliance, into training, into technology, into the telematics, the cameras, the AI piece of things, to offset all these claims that are coming in. You never like to see people, stop and go out of business from the small perspective. But it's also, like I said, it's a positive that the larger players are investing more, the smaller players, not to say all of them are that way, but majority just don't have the means to put in the proper technology, put in the proper compliance and the training time to, really combat all this stuff that's coming at them. So it's a very big challenge. The wrongful repossession claims, like I said, they are just climbing, right? And the biggest challenge and success is these contracts. It's still, I would say around COVID back in 2020, over 80-90% of the contracts that we see from an insurance perspective were not written well. Both sides were kind of leaving themselves open, from a lender or the field agent. Either side was kind of getting stuck on different things that they shouldn't have. I would probably tell you it's closer to 50-60%. So huge headway, continuing to make big headway to make sure these contracts are written well. So when a claim does come through, the responsible party will take care of it. So huge headway is being made, but we're not even close to where we want to be. So it's a positive and negative both in itself.
Great. Thank you so much for sharing. So some advice for peers looking to improve performance. This question is for both Regine and Brian. Brian, we'll start with you. If you could share one piece of advice with a peer looking to up their game and enhance their performance in the asset-based lending and lease finance industry, what would it be?
Ooh, what a great question. I think one of the biggest opportunities or positive things that we get to enjoy from coming through a downturn like we have come through, and I do believe that we're close to, seeing it turn the other way, or at least start to turn the other way, is that there's so many lessons learned now in the data, in the experiences of people who have now gone through it. So really, I'm almost stuff like this where it's okay. Well, here's a lender who went through it, who has had an existing portfolio, and has come through. Find somebody, a peer in the industry who does something similar. Learn from them, because I think everybody's takeaway from this downturn is, okay, let's go back to our secret sauce, and what can we change? What can we modify? What did we do well? And then use the data to propel us forward through the next upcoming upturn to make that even more successful. So specifically, I mean, in my world, one of the biggest things that we've learned is, and I touched about it a little bit earlier, is the liquidation strategy has been insufficient. Minimizing loss is going to be a bigger priority. How do we implement things to minimize loss? Whether that's a pre-risk mitigation or a post repossession liquidation strategy. And then also, I think I've come to learn that the underwriting is the underwriting. We do a lot of looking. If your box on the front is solid, it's not bulletproof. Underwriting is not bulletproof. There is risk involved. But when the box is solid on the front end, then you can anticipate certain risks on the back end. And I think that's one thing that we've proven here at TAB, is that the underwriting on the front end has been consistent, and it doesn't necessarily need to change. What needs to change is, how do we monitor those key metrics in a struggling borrower to maybe bring that to our attention sooner, and when it comes time to work out or go to the next step, or wind it down, how are we going to do that more effectively? That's maybe where my mind is being focused.
Great, thank you. And Regine?
So my one piece of advice is actually advice that I have shared throughout my career. It doesn't just necessarily relate to the last 4 years or learnings from the last 4 years, but you've got to be willing to pivot. If what you're doing isn't working, try something else. What we were doing before the pandemic was working great. We had wonderfully low delinquency and charge-off. We didn't really need to look at other options. We were running like a well-oiled machine. Then when pivot hit, I could no longer continue to just assume we were doing everything right. Our processes were buttoned up, top notch, where they needed to be. I had to start looking at other options. And that is just looking around to current vendors, that we use, like the conversations I had with ACS. We get solicitations all the time from sales reps at other companies and, wanting to help us with this type of managing, X in our portfolio or being Y for us, out in the industry. And you never have time to go through those vetting processes and digging processes. But when you need to pivot, then you've got to make the time to look at other options out there and other possible solutions, and don't get stagnant, and you just have to be willing to pivot. And I always tell my boss, I'm always here to shift and change as needed.
Great
To-
advice. Thank
Andrew,
you.
to throw a little bit more onto that, I always kind of reference from a lender to a field agent. It's not by chance that you guys have good compliance and good safety and low, lawsuits, claims, etc. That's a culture that you guys that instill in your teams. And the one saying that I like to kind of tell everybody is productivity cannot trump safety and compliance. If you're producing at a high rate, it means nothing if you're not doing it compliant and safe. So those safety, that culture that you create in your teams, that means everything. Productivity will follow if that's done. So that's a key to me.
Yeah, no, 100%. I think, myself, sacrifice a little, sacrifice results for, doing things the right way, all the time. So, no, that's great. And I want to respect everybody's time. I think we've scheduled this to conclude at 4:00. We do have a question for the audience. So I'd like to get to a couple of questions before we wrap up. Mike, I have a question for you. So what organizational changes, strategies for fostering collaboration and partnerships between lenders, insurance providers, and other stakeholders in the industry? Can you share some that you have?
Yes. So there's a lot of there's a couple national associations out there. There's a lot of state associations that have become very popular. There's a couple events. So we, myself, my team are part of a bunch of associations. We attend all the events, and we push and work very hard to get all repossession companies, finance companies, lenders, field agents, everybody, employees, to these national events that are out there. One large one is North American Repossessor Summit. Everybody that's involved in repossession goes there, and the education is amazing. The networking is amazing. Across the board, you're not going to find better to team up with everybody, from a lender to a repossessor to an employee, a field agent, you name it. Everybody's there. And that's really where, the number one is networking. You learn a lot from each other. And number two, everybody's coming to the table trying to learn, trying to get better, trying to understand really what is the issues on the table right now and how do we solve them. And we play a very, very big part in advocating to get everyone to that table to work together on all sides. So from my standpoint, I'm very much involved. My team's very much involved in all these associations, that large event every year. And I think that's key for everyone to get involved. Don't sit on the sidelines. Be the change you want.
Thank you. Brian or Regine, do you have any strategies that you could share for fostering collaboration and partnerships between other lenders, insurance providers, and stakeholders in the industry?
I think Mike's answer was fantastic. I need to know what events he's going to so I can go with him. We can collaborate together.
Absolutely.
I think I've been hungry for peers in the industry for the last couple of years, just because I feel like we're a little bit of a niche box. But and as I've looked to try to find folks to maybe associate with, it has been through associations. It's been through going and finding places where people are gathering that do the same thing as you. But it's also when you find those people, keep in touch with them, keep keep close contact with them and bounce stuff off of them. Be open to finding different ways to do things that you maybe didn't consider. So I think I'm in the pursuit of trying to find that. If anybody has any great ideas, I'll be shadowing Mike for the next little bit.
Great, thank you. Regine, do you have any strategies that you can share to foster collaboration and partnerships?
Sure. I will speak to existing partnerships. The various vendors that we use on the back end, whether they be related to the customer service titling or recovery and legal processes. I do what's called touch points. I just call them touch points. That's where I've got routine calendars on meetings, whether it be once a month or whether it be once a quarter. Just to touch base on the services they're providing, review whatever stats, are relevant with that vendor for the service they're providing, talk about any enhancements or improvements that could be made. So often along with that, with those touch points, we have an actions item list. And so from touch point to touch point, we're reviewing on the action items, seeing where we stand on making progress with efficiencies or automation, whatever the case may be. I think that's been a big positive way that I've handled collaboration with current or existing relationships.
Great, thank you. So that, we have a few minutes left. Brian, Regine, and Mike, I'd like to thank you all so much for sharing your valuable insights and experiences with us today. It's always a pleasure speaking to and working with each of you. As we navigate the challenges and the opportunities ahead, we hope the lessons these professionals have learned, the strategies we've discussed, and the importance of staying adaptability and innovation are great takeaways for you. I'd love to know what you all think. You've shared some of your questions, so thank you so much for that. And that will conclude this webinar.
Thank you very much for having us.
Thanks, Andrew.
You're welcome. Take care.